Hey, what's up YouTube? My name is Justin Nguyen, and today we're going to be talking about some of the best ETFs that you can buy in the stock market. ETF stands for Exchange Traded Fund. When you buy an ETF, it's like buying a basket of stocks instead of just buying individual stocks. Buying ETFs are a great way to start investing in the stock market if you have never done so before. Or having a high quality ETF is great for any type of investment portfolio. One of the most popular ETFs that you can buy is SPY, ticker symbol SPY. So anytime you're buying SPY, you're buying into the S&P 500 index. When you buy one share of SPY, you're buying all sorts of companies like Amazon, Apple, and Tesla. When it comes to investing, you can buy individual stocks, you can buy ETFs, or you can do both. It seems like when most people get into the market, they just want to pick individual stocks for themselves. I think this is because when you buy individual stocks, it can be more exhilarating and fun, whereas buying an ETF can seem kind of boring. I've noticed that people find joy when they tell other people about the individual stocks that they're picking. They like to say they're buying NEO, Shopify, or Square. It seems that nobody wants to say, I've been buying heavy on an ETF. Another reason why I think people don't want to just buy into an ETF or some of the main indexes is because they want to try to beat the overall market. The overall market gains on average every single year 7 to 10%, and so they try to achieve better results by individually stock picking. The funny thing is, did you know that 89% of fund managers have failed to beat the S&P 500? These professionals are paid extremely well to manage people's money, and yet it was reported that a majority of them were unable to beat the overall market, which means that the people who utilize fund managers to manage their money in hopes to make a greater profit, they would have just been better off buying into the S&P 500, and they would have made more money, and they would have avoided those management fees. It is also reported that 78 to 97% of actively managed stock funds fail to beat the main stock indexes. It is possible for people to beat the overall market for 1 to 3 years during insane bull runs, but studies have shown that over longer periods of time, buying the big indexes make more money. As it says here, it is relatively common to beat the market for 1 to 3 years at a time. That can largely be explained by luck, but the data clearly shows that even professional fund managers are unable to beat the market consistently over a longer period of time, like 10 to 15 years. In 2008, Warren Buffett actually made a $1 million bet that hedge funds would actually underperform the overall market over a multi-year period. In the year 2016, the hedge funds had returned 22.04% on average, while the S&P 500 had returned 85.4%, almost 4 times as much. Here's why I share this. Buying indexes and ETFs are actually very profitable. So instead of trying to stock pick yourself, a great way of investing is just buying into ETFs. It saves you time, effort, and energy from trying to figure out what stocks you should buy, and is a safer investment because you are diversified across many different companies, because remember, every time you buy an ETF, you're buying a basket of companies. ETFs are so overlooked, but buying them is a great way to achieve wealth and financial freedom. There are many great influencers on YouTube within the financial space who share how ETFs are a great way to make millions. There are 7,602 ETFs globally on all of the world's stock exchanges, and there are 2,204 ETFs that can be traded in the United States. Needless to say, there are a lot of ETFs out there, but not all of them are good. So I narrowed down some of the best ETFs that you can buy so that you can get started investing in the stock market maybe for the very first time, or you can add it to your current portfolio. The first ETF that I want to share with you is the Vanguard S&P 500, ticker symbol VOO. I like this one for multiple reasons. For starters, this is a simple ETF that tracks the S&P 500. Think of the saying, if you can't beat them, just join them. Too many people have been unsuccessful in trying to beat the S&P 500. So if you can't beat it, just buy something like VOO and you'll get similar results to the S&P. VOO is currently trading at $361.05. In just the last year, VOO has gone up 16.36%. And in the last 5 years, it has gone up 105.06%. Not all ETFs pay a dividend, but this one does. Its current dividend yield is 1.09%. And as you can see here, it has been steadily increasing its dividend over the last few years. The nice thing about this ETF is that it is well diversified. This ETF has exposure to the 11 sectors of the stock market. It has the most exposure to information technology, which is standing at 27.8%. It has the lowest exposure to energy, which is at 2.4%. The 10 largest holdings that VU has is Apple, Microsoft, Amazon, Alphabet, which is Google, Facebook, Tesla, Berkshire Hathaway, Johnson & Johnson, JP Morgan Chase, and Visa. This ETF has a total of 509 stocks. The nice thing about this ETF being so diversified is that if you have a handful of companies that are a total flop, you will be well diversified that the flops won't affect you that much. VU is basically a copy of the S&P 500, as you can see, has performed almost identically in the last 10 years. The overall index and VU are so closely correlated that you can barely see VU on this chart, which is in blue. This ETF has $196.7 billion in assets that it manages. So the nice thing about this ETF is knowing that there are a lot of other investors out there who trust Vanguard to be able to make them a good profit. So every ETF has an expense ratio, which means they charge a certain percentage of your investment as payment for them to allocate your investments for you. This one actually has a very low expense ratio at 0.03%. To give you an idea of how cheap that is, I'll compare it to another popular ETF that people buy called SPHD. SPHD has an expense ratio of 0.3%. That is 10 times the cost of VU's expense ratio. Another thing that's cool about this ETF is that the Investment Research Center Morningstar gives it a 5-star gold rating, which is really good. So if you're new to the stock market, if all you invest in is this ETF, that wouldn't be a bad idea. It is well diversified, it has performed well over the last 5 years, has a low expense ratio, and is basically a copy of the S&P 500. Overall, this ETF is great to have if you really believe in the future of the American economy. Now I'm gonna share with you a company that offers multiple different ETFs, and they're all great. The company I'm talking about is ARK Invest. ARK Invest is an asset management company founded by Cathie Woods in 2014. ARK Invest offers 7 different ETFs. 5 of them are considered actively managed innovation ETFs, and 2 of them are index innovation ETFs. As you can see here, they're geared towards specific niches within the stock market. They have ETFs for innovation, autonomous technology and robotics, next generation internet, genomic revolution, fintech innovation, 3D printing, and Israel innovative technology. In 2019, their innovation and genomic revolution ETFs won awards for being the best ETF suite of the year. I really like the philosophy of ARK Invest in comparison to other asset managements because they meticulously select what type of investments they're gonna make based upon future growth and innovation. As they say on their website here, ARK believes innovation is key to growth. We aim to capture long-term growth and capital appreciation created by disruptive innovation. They seek to offer attractive performance uncorrelated to traditional investment strategies, access to companies in some of the most promising areas of the economy, and exposure to aggressive growth through a fund rather than individual stocks. As you can see on the graph here, they map out some of the best innovations in the last 250 years. And they believe that some of these things, like next generation internet, DNA sequencing, automation, energy storage, and blockchain technology are the future, and so they choose to invest in these things. A majority of ETFs look for companies that have already grown and are well established, whereas ARK Invest looks for companies that have future growth potential that could be profitable. Have you ever been a person who's looked at stock charts of Amazon, Tesla, Apple, or Microsoft and been like, man, I wish I invested in those companies early on? Well, ARK Invest looks for those type of companies. When it comes to those companies that we all know and love, like Amazon, Apple, and Tesla, they weren't always popular. Some of them were not profitable or were on the verge of bankruptcy. but they had innovation. And that's why ARK Invest seeks to buy companies that are innovating. So let's take a closer look at the ETFs that they have to offer. ARK Innovation ETF is the most popular one. It is currently trading at $156.58. In just the past year, it has gone up 166.79%. And in the last 5 years, it has gone up 872.55%. As you can see, ARK has greatly outperformed the overall market, but it does come at a cost. The expense ratio of this ETF is very expensive in comparison to other ETFs. It's at 0.75%. That is 25 times more expensive than VU, but ARK Innovation has been able to perform significantly better. This ETF is not one that focuses on diversification in all the 11 sectors of the market. It just looks for companies that are up and coming. Here's the top 10 holdings. Tesla holds the largest position at 8.63%. And here's its smallest position, Organovo Holdings, which holds 0.01% of its overall allocation. This ETF won the Active ETF of the Year in 2019. It was recognized by Fund Intelligence during the Mutual Fund Industry and ETF Awards. And according to the Investment Research Center Morningstar, this ETF gets a 5-star rating. And actually, all of the ARK Invest ETFs get a 5-star as well. All the other ETFs that ARK Invest has to offer are basically the same when it comes to expense ratio and the philosophy of its stock picking. The only thing different is the type of technology that each ETF invests in. To give you an example, as you can see here, the ARK Genomic Revolution has exposure to gene editing, therapeutics, agricultural biology, and healthcare innovation. And here are its top 10 holdings. And Teladoc Health Incorporated holds the largest position at 8.11%. So overall, all these ETFs that they have to offer are really great. And I think that they have a place in everyone's portfolio. So there you have it. Those are 8 ETFs that you can buy that I believe are some of the best ETFs that you can get in the market. So whether you want to buy VU, which is basically a replica of the S&P 500, or you want something geared more towards growth, any of the ARK Invest ETFs are a great option. And remember, ETFs are a great way to make money in the market. So thank you so much for watching and stay tuned for next time.